A lot of people have been frustrated that prices haven't gone down by more or gone down at all in certain parts of America the last 3 years. But I'm telling you here, the data is all moving in a positive direction for you as a home buyer, especially if you live in the South and Mountain West regions of America. I mean, there is a lot of reason to hope that 2025 is going to be a much better buying environment for you.
Welcome to Thoughtful Money. I'm its founder and your host, Adam Taggart. Well, this is your lucky week, folks. Today we've got the good fortune to hear another housing analyst's 2025 outlook for home prices. We're joined by Nick Gerli, founder of Reventure Consulting and creator of the Reventure app. Nick points out that buying a home has rarely been this expensive in living American history. Once before was in 1981 when mortgage rates were a whopping 18%. The other time was in 2006, right before we experienced the biggest U.S. housing correction ever. And speaking of corrections, Florida and Texas now seem to be clearly in one. And that weakness looks like it may be spreading into other states. So what is all this forebode for 2025? Well, we'll ask Nick directly. Nick, thanks so much for joining us today.
Great to be here, Adam.
Hey, Nick, look, lots to dive into with you. Really quickly, folks, before I do, just a quick public service announcement. If you're watching this video the day it releases, you're watching it on the last day of 2024. So first of all, Happy New Year to everybody. Secondly, if you have not yet upgraded to the premium Thoughtful Money newsletter yet, but have been meaning to, and you've been hearing me give these reminders that the deadline for doing so is midnight tonight. Run, don't walk. In fact, hit pause right now. Go to thoughtfulmoney.com, hit the newsletter link at the top of the site there, sign up for the newsletter and upgrade to the paid service so that you can get grandfathered in at the current price before the price goes up on January 1st. And if you sign up now and you get grandfathered in at today's current lower price, you'll enjoy that price for as long as you remain a subscriber. And just a reminder too, those folks who signed up last year for the super low $8 a month price, your price isn't going to change either. As long as you remain grandfathered in at the lowest, at that price that you initially signed up for, as long as you remain a subscriber, you're going to get that lowest rate. So I want to make sure everybody gets grandfathered in at the best price they can. So again, hit the pause button, go to thoughtfulmoney.com, hit the newsletter link at the top of the site and upgrade to our premium newsletter. All right, thanks for hanging in there with me on that, Nick. Okay, so lots to talk about what's going on in the housing market there. We got a lot of questions for you, but why don't we just start at a high level? What's your current assessment of the U.S. housing market?
The housing market is frozen right now entering 2025. Homebuyer demand is at multi-decade lows, and we're finally starting to see housing inventory increase on a national basis, which is good news. However, home prices are still at a record high, and as a result, housing affordability for home buyers is at near a record low. Home buyers in America entering 2025 need to spend nearly 40% of their gross income in order to buy a house and afford the mortgage and tax payments. And clearly, that's not a sustainable metric. It's why the home buyer demand is down, and it's why prices are going to be dropping in quite a few states in 2025.
Okay, so you do expect price declines in at least certain states. You have developed a new price forecasting tool for, I think, pretty much every real estate market around the US, and that rolls up to a national forecast. We'll get to that in this discussion, but let's leave that out there as a teaser for folks because there's a lot of foundational questions I want to clarify with you first before we get there. Let's see. I mentioned in the intro that there's been the past couple of years, there's been this back and forth of is housing going to correct or is it going to remain resilient? It has remained resilient, I guess, if you just look at average prices alone. But as you said, it's a frozen market. Transaction volume has cratered. Unaffordability has skyrocketed. So from a lot of those other metrics, doesn't look like a very healthy market. But there's been a debate whether the market's going to crack or not. In certain states, the debate's over. The housing market has cracked in places like Florida and Texas. So why don't we start there? Can you tell us about what's going on in the action in those states right now?
Sure. So, of course, Florida and Texas, as well as some other states in the Southeast, they were major boom areas during the pandemic that lots of people moved into. The prices in Florida, for instance, went as much as up as almost as much as 60% in the 4 or 5 year period from 2019 to 2024. But now prices in Florida and Texas are starting to drop due to a massive spike in inventory. So over the last year, we've seen the supply on the market absolutely skyrocket. More and more listings piling up, with those listings lingering on the market for longer and longer. The sellers in Texas and Florida are getting very frustrated right now. And as a result, they're being forced to cut the price. And we're now in officially, we're now in year-over-year price declines hitting these states, particularly in certain cities, which is, of course, massive news for the housing market. Because Florida and Texas, we were told 2 years ago by the housing market mainstream, were the two best states to buy real estate. Now they're two of the worst performing housing markets in America, and they're leading this downturn heading into 2025.
All right. And when you say that we're now seeing average price declines in these states, just ballpark, what sort of magnitude statewide are we seeing?
Just a little bit, like less than 1% decline year over year on a statewide basis, but those declines will likely accelerate into 2025. And in certain markets, we're seeing as much as a 7 to 8% decline year over year.
Okay, and that's where I was going, which is we might hear, oh, it's down almost 1%. Most people be like, well, what's to worry about that? And you got to understand that that's an average, and that there are places in there, in case of Texas and Florida, in many cases, it was the hottest markets, the Austins, the Dallases, the, you know, Miamis, et cetera, that are maybe the state's down 1%, but those markets could be down close to 10% year over year, or in some cases since the peak. I mean, Austin's down what from the peak? Like 20+% at this point?
Austin, Texas is down 20% since the middle of 2022.
Yeah. Okay. So even though you hear, oh, 1% annual price decline doesn't sound so bad, depends where you live. In
Well,
some places, it's a lot worse.
and Adam, let me actually just jump in. A 1% average price decline is actually a massive deal, because we were told 2 years ago that these housing markets would just keep going up forever. So the fact that we're actually seeing values decline officially is a huge deal. And it's going to be a gigantic wake-up call to many sellers in the housing market in Texas and Florida who are watching this video. They might not know yet that the market is in decline, but as 2025 goes along, they'll see the evidence. And I'd just like to show you actually a graph here indicating what we're seeing here in some of these housing markets in the Southeast. Because for your viewers, it's very important to understand the bifurcated nature of this housing market. If we just look at Florida, we could see at the pandemic low, there was 49,000 listings in Florida. Now there's 152,000 listings, and this listing count's likely to go up by more. You could see it's the highest number of listings in 7 years in Florida. You could
Highest in
see if we
7 years
go
and triple where it was in the pandemic low, right?
exactly. So this pandemic low, you could also see in Texas, the same thing happened. 46,000 listings during the pandemic low, which is ultimately these low listings caused the boom in prices in the subsequent years. Then inventory slowly rebounded. Then it rebounded a little bit more last year, but take a look in the last 12 months. We went from 93,000 listings in Texas to 115,000 in just a year. And that's also easily the highest level going back almost a decade. And so the other thing to understand, Adam, is that the housing market operates on a lag. So this inventory spike we're seeing now has yet to be felt in prices. It's only starting to be felt in prices. So when we say values in Texas are down 0.5% or 1% year over year, that's based on what the inventory was a year ago, right? Now we have even more supply, even more days on the market, which is going to push prices down in 2025, especially with how much home building there is in these states and how many investors are now selling.
Okay, great. So that's where I want to go. So it seems like in Florida, Texas, the key thing that has changed has been inventory. And obviously lost supply and demand, more supply, demand per unit is lower. You know, people offer less because they've got more options, right? Um, so I think the key question here is, okay, inventory is rising. It's a lot higher than it used to be. Has it peaked, or do we have years of even greater inventory ahead of us? So can you tell us what's driving the inventory here? You mentioned a couple of things. You know, these were very popular states, so developers were, you know, going hog wild, building units there. Is it, you know, new units are coming onto the markets from the builders? Is it that There are weak-hand sellers like institutions, institutional owners, or say short-term rental people that are realizing I'm not making any money off this thing anymore, time for me to dump it. Or is it people, regular homeowners, who are just unable to afford to keep the houses anymore because the cost of homeownership's gone up?
It's literally everything you just said, Adam. And again, I want to be clear for your viewers. What we're talking about now is started in Florida and Texas, but it's a sign of things to come in the rest of the South. So also in states like Georgia, Tennessee, Arkansas, Alabama, South Carolina, North Carolina, even in the Mountain West, Nevada, Utah, Arizona. All of these states kind of follow the same trajectory as Florida and Texas. They lead. And what we're seeing primarily is actually a slowdown in demand. And I want to show you what I mean by a slowdown in demand, in addition to the increase in supply you talked about. But I want everyone to understand that the market here has changed. The market here has changed. And in Florida, on this graph, we're looking at the domestic migration into the state, basically Americans moving to Florida over the last 35 years. And what do you see? We've always had Americans moving to Florida, but we had an especially big surge during the pandemic. It peaked at 315,000 in 2022. But take a look at what's happened the last 2 years. The domestic migration into Florida, according to the US Census Bureau, this is Census Bureau data, plummeted to 64,000 positive net migration in 2024. That was the fifth worst domestic migration reading in Florida in the last 35 years. So, yes, owners are not able to afford the insurance in Florida. They're selling. Builders are building a lot. Investors are selling. But the demand is way down in Florida. It's also heading down in a state like Texas. Look in Texas. We
Yeah.
peaked at 222,000 domestic migration in 2022. Now we're back down to 85,000. And if you look at any state in the South, even if you look at some of the boomtown areas like Idaho, it's the same story. The domestic migration is falling off the table because the trend in the pandemic of people moving to these states has slowed, and it actually is reversing in many cases due to people getting called back into the office, due to people going back to move closer to their families.
Okay, so it seems like a ton of that was due to the work from home boom, right? All of a sudden, I can work from wherever I want. So let me get out of this cold climate. Let me go, get a tan while I work remotely from home down in Florida. How much of the really low number here in 2024 do you think is due to 2022 just having, pulled so much future demand into that year versus return to office, or people just saying I can't afford the move anymore, or I'm regretting it and I'm actually going to I got to move back because I'm either getting called to the office, or it turns out I don't like it where I lived. I don't like this place now and I want to go back to where I was.
Yeah, it's a great question. There's definitely a lot of that occurring, right? There's just the overhang, like we had so much demand in 2021 and 2022, and as a result, there's just going to be less the next 3 years. Then there's people getting called back in, but I think affordability is also a massive issue. So if you go back 3 or 4 years ago, Florida, Texas, Tennessee, Georgia, Nevada, these states were affordable. You could actually, sell your house in Illinois, New York, New Jersey, Connecticut, or California, and then go to these states and really buy, you could buy a mansion for half the price. You cannot do that anymore. So these states have lost their affordability appeal.
Hmm.
And that's the biggest thing, I think, actually driving it. So yeah, you have the overhang of remote work, but then the affordability appeal is no longer there. And that's also driving people out. So the metric I quoted you was a net migration figure, which takes people in minus people out. So also an increase in people out of those states is driving down those figures as well.
Okay. Look, you mentioned something I just want to pull up here really briefly. I mentioned it in the intro. Um, Here's a tweet you put out the other day. Rarely has been buying a home been this expensive in America. I mentioned already 1981, we had a similar peak, and that's when mortgage rates were bananas, right? 18%. The second was right before the housing crash. Um, we have this similar amount of unaffordability today. Um, and obviously it asks the question, is this presaging another housing crash? Well, we'll get to that in a bit. But what's contributing to this unaffordability, I think you said something like on average it requires like 40% of gross income to buy a home
Yep.
today for the average buyer,
Yep.
which is huge, right? Um, it's not just the price of the house, right? Now, mortgage rates have gone back up relative to their average over the past decade or so, right? So, they're relatively more expensive, or certainly relatively more expensive than they were during, say, the COVID era. Um, but with the inflation spike we've seen, the costs of home ownership have skyrocketed. It may be to the point, where, well, I guess to where it's, right up there in one of the most unaffordable periods we've ever had. It's not just paying the mortgage, it's paying the property taxes, it's paying insurance, obviously. And we've heard horror stories about people's insurance going up by double digits, in some cases doubling or tripling in certain markets, especially if you live in markets that have been getting hit by a lot of extreme weather now, and the insurance companies are just jacking the rates through the roof. It's also repairs and maintenance. We're hearing an increasing amount of reports that people have just stopped doing a lot of basic maintenance on their house because they can't afford it anymore. I should note too that I think the average age, or the age of the average house in America, is something like 40 plus years. So we have this sort of aging fleet of homes that people are not paying to upkeep. And it's going to be interesting to see what issues that might create a decade or two down the road. But housing has almost never been this unaffordable. Um, how much of a role is that playing here of just, hey, people are just saying, I literally would like to be a home buyer. I just can't afford it under these circumstances.
Yeah, absolutely huge. Absolutely huge. Because one thing people should remember, right, is that when you buy a house, yeah, you have your mortgage interest, but you also have your property tax payment. You have your property insurance payment. In Florida, where I live, you have your HOA fees in a lot of
Mhm.
places. These are ongoing costs that are not capped or fixed. They often continue to go up, right? And so that's causing a lot of issues for a lot of homeowners across America and would-be home buyers, is the costs of ownership on an ongoing basis, right? So you correctly pointed out, you have the upfront burden, right, of the down payment and the price, and then, calculating what your monthly payment's going to be. But then you have the ongoing burden of seeing those costs increase. And I think for a lot of people, it's just not worth it. Now, the thing that's driving this, though, is prices, right? Higher prices drives taxes up. Higher prices drives insurance costs up. So it all comes back to prices in the end. Prices are too high in this housing market. They've actually never been even close to this high. So the graph you showed was showing house payments relative to income. But the graph I'm going to show you now is home prices adjusted for inflation going back almost 140 years. And I think this graph really tells you a lot about what is going on in the housing market. This blue line is inflation adjusted home prices, comes from the Robert Schiller Home Price Index, as well as the Bureau of Labor Statistics. You could see, going back to 1890, we've never seen anything like this before in terms of home prices, real home prices. The only other time it even came close was '06, before the big crash. So prices are the most expensive they've ever been by leaps and bounds. And that is what is driving the affordability crisis. If you look at the orange line, mortgage rates, you can actually see that while mortgage rates have gone up from the low of 3% a couple of years ago to the high sixes, they're actually now pretty well within what the long-term 130-year range is for mortgage rates. So I'm going to
Hmm.
call mortgage rates in this market maybe slightly elevated, but not that crazy. It's the prices, which are way too high. Prices right now, adjusted for incomes, are about 25-30% overvalued compared to their long-term norm. And ultimately, high prices, sky high prices, is why buyer demand is so low right now.
Can you pull that chart back up again for a second?
Sure. Yeah.
Um, so it's hard not to look at that chart and think, oh my God, it's the worst time ever to buy a house. Um, And yeah, for all the screaming that people are justifiably doing about the relatively high price of mortgage rates in the short, relative in the past decade, like I said, um, really not that high, to your point, when you look at the average over the past bunch of decades.
And
So
could I just
it's
could I just
yeah,
point you to something, Adam, too, to
sure.
understand? It's like how different the housing market of the last 25 years has become.
That's
Because if you look
exactly
at
where I was
inflation,
going.
if you look at inflation adjusted prices from 1890 to the late 1990s, over 100 years, they did not go up. So what this is saying is that for most of the last century, the 20th century, Home prices after adjusting for the rate of inflation, so we're adjusting prices downward for the rate of inflation, they didn't grow, meaning that prices basically grew at the rate of inflation for majority of the 20th century. Then we flip into the 21st century, something changes. We have a big bubble in '06. We have a crash. Now we have another big bubble. What I think changed in the late 90s, early 2000s, we started to have Federal Reserve interference in the economy and housing market like we had never seen
Central
before.
planner intervention. Yeah.
That's right. Alan Greenspan cutting interest rates to like 1% in 2001, right? That was really like the big thing. And then since then, the housing market has just become very volatile, right? And I feel pretty confident in saying that this situation is not going to last of inflation adjusted prices being this high. There's only really two different outs for the housing market. One is prices to crash. Another is rampant inflation, right? It's going to have to be one of those two, where
Yeah.
either prices go down by a lot, or we have some type of wage price spiral where incomes and the cost of everything go up due to inflation. That's the only way that this housing market has any chance of correcting to normal. If neither of those things happen, then it's just going to stay in this stasis where demand is super low.
All right. So let's see. So we've got this market that sees a lot less transactions right now because an increasing number of people are just sitting out, either because they don't want to buy at these crazy multiples or they can't, right? And actually, right now, the math does work. Like if you're just looking at it at a pure math side of things for at least the next couple of years, how much am I going to spend, annually on my shelter? The math works out right now pretty in favor of renting versus buying in most cases, correct?
That is correct. Now, the caveat is it does depend on which city and state you're in,
Sure.
but in most metros and states, it is more affordable to rent by a significant amount, especially out in California, where you are. Often the costs of renting are half of what the cost of owning the same home would be.
Wow. Okay. So we've got, this embedded population of homeowners, many of whom are older, right? Boomers, who are planning on selling their home for a nice amount when it comes time to them to downsize or head off into the assisted living facility or whatever, right? Um, and I guess one question is just your question about your point about you don't think this is going to last. We're going to last up at these extremes. Uh, is there sort of a demographic ticking clock here that basically says, look, as long as the younger generations are priced out the way they are right now, the boomers are going to have a hard time finding buyers, at least on average, for their properties at the prices that they think that, and are hoping that they're going to get for them.
Most definitely. So there's going to be some type of demographic cliff on the housing market that's maybe started already in a state like Florida with an older population, but it's really going to hit like maybe in 5 years from now, by 2029, 2030.
Mhm.
We will start to see many of the existing homeowner population age out of their homes into nursing homes and unfortunately pass away. This is going to create a perpetual wave of inventory unlike anything the housing market has ever seen in terms of the baby boomers beginning to exit the housing market. Now, this is not something that's going to be in 2025. It's not going to be a main story next year. But each additional year that comes, yeah, we're going to see more and more baby boomers age out of their homes and sell their homes. And that's going to be especially true in certain cities and states that have the highest share of the housing units owned by an older population. And to your point correctly, Adam, is that until prices drop, we're not going to see the buyers come back, right? The millennial and Gen Z cohort is so not interested in buying a house at 40% debt to income. I mean, I'm a millennial. I know many other millennials. I know many Gen Zs. We do not feel rushed to overpay for houses. I think we saw what happened in 2008. Many of us grew up with that when we were in
Mhm.
college and entered the workforce. And I think many of us are skeptical of buying homes at grossly inflated prices with sky high mortgage payments. And so I think your point's a very correct one. In the long term, medium to long term, there are headwinds for the housing market related to the demographic shift that's coming.
Okay, so here's where I'm going with this. We've got this ticking clock demographically, right? And whatever the timeline is where it matters, 5 years, 10 years, whatever, right? Um, in the interim, as long as the housing market remains as frozen as it is, you've got existing homeowners who maybe would like to downsize, but are trapped, right? As long as interest and mortgage rates are where they are, prices are where they can't sell their home and downsize to a place they want advantageously, right? There, we hear about folks being locked in, right, by their 3% mortgage or whatever, right? So we've got these people who are locked in and they're basically playing for time, right? They're hoping that mortgage rates are going to come down at some point and save them. But they've got this elevated cost of living that we've been talking about, right? So every month they've got to come up with the scratch to make their mortgage payment, uh, pay their increased property taxes, their increased insurance, whatever repairs and maintenance they're forced to do. Um, and so, and I'm not even talking about a recession with job loss yet. I'm just saying that as we go along this timeline where we have these elevated costs of home ownership, more and more of those people are getting more and more squeezed, right? And we are already beginning to see delinquency rates on a lot of different types of loans, credit card, autos, et cetera, increase. And talking to mortgage analysts, I've heard them say we're starting to see concerning delinquency rates on some mortgages now. So as we get to this further date of the demographic reckoning that we just talked about, are we going to see more and more existing homeowners just have to capitulate? Like, look, I just can't afford my home anymore, and I got to list this thing.
Yeah, it's a great point. I think people are getting squeezed, right? There was this hope in the housing market that there would be a jubilee after the Fed cut rates, right? And then there was this hope that there would be a jubilee after the presidential election was over. Uh, the Fed has cut rates 100 basis points, and there's been almost no improvement in home buyer demand. The election is over. There's been almost no improvement in home buyer demand. So now yes, you have all eyes on the sellers in the 2025 housing market. Are the sellers going to begin to feel the squeeze enough to put more supply on the market to really start to bring those overvalued prices down? And I think we're starting to see it, Adam. So let me show you. We were talking about hypotheticals a second ago with future inventory down the line, but where's actual housing market inventory on a national basis? Well, you could see as of November 2024, we're going to update the data for December soon from Realtor.com. We had 953,000 resale listings on the market in November 2024. This is now, excitedly, back up above the long-term average for the last 7 years.
Wow.
Now, we're not quite back to pre-pandemic. We're still about 15% below pre-pandemic, but we're up 26% year over year on listings across the entire US housing market. And you could see we've made lots of progress. So this is kind of speaking to what you're saying, is that yes, we're starting to see more listings hit the market. We're starting to see listings linger for longer. This is the days on the market for listings, also data from Realtor.com. You can see last year in November, there was 52 days on the market. And again, I want you to think of last year as kind of influencing what's going to happen over the next year. So we had 52 days on the market, which was below the long-term average. Now we're up to 62 days on the market, which is above the long-term average, slightly below where we were before the pandemic. So we are seeing that, we're already seeing what you're talking about play out. Higher DOM, higher inventory. And I think, a lot of people have been frustrated that prices haven't gone down by more or gone down at all in certain parts of America the last 3 years. But I'm telling you here, the data is all moving in a positive direction for you as a home buyer, especially if you live in the South and Mountain West regions of America. I mean, there is a lot of reason to hope that 2025 is going to be a much better buying environment for you as a buyer.
All right, and let's talk about the buying environment for a minute because we were talking before we turned the camera on here, and you were telling me about some of the deals that the home builders are offering in Florida, where you are right now. And it is like two different worlds, right? So if you want to go buy a home from a home builder, the home builders are increasingly motivated to get rid of the inventory that they've built, right? An empty home for them doesn't have any value for them. And so they're cutting some real sweetheart deals, not just better pricing, but way better financing than you would get from a bank for a mortgage on an existing home, correct?
Absolutely, Adam. And I think this is one of my favorite stories in the housing market right now, is that the builders are really starting to act and look like it's 2007. So yes, on a national basis, prices are still up. There's still an inventory shortage in many cities. But if you look at the builders, what they're starting to do is very, very interesting. They're starting to really slash prices. They're giving crazy mortgage rate buy downs, and the number of homes sitting on builder lots is absolutely skyrocketing. So I want you to take a look at this, Adam. I'm going to start with actually something called spec inventory, builder spec inventory. And what spec inventory is homes that are completed and sitting vacant on the builder lot. What you can see is that in the end of 2024, we had 124,000 completed vacant homes sitting for sale on builder lots. What do you notice? That's the second highest level ever going back to 1972.
Wow.
So we hear all this narrative about the supposed national US housing shortage, right? And that we're not building enough homes is what everyone says. Well, the builders are having trouble selling the homes that they're already building, is what this graph is telling you. And I want you to take a look. The last time we saw it this high was February 06 to June 09. That's the only comparable period in US history, the last housing bubble and crash, where we saw this much spec inventory from builders on builder lots. Now, this is very regional. So what we're now looking at here is total new homes for sale. This isn't just completed spec inventory. It also includes homes under construction and homes not yet started. But now this is broken down between regions. So you can see in the South, there's 300,000 new homes for sale from builders. That is the highest level ever, even higher than the '06 bubble. Additionally, you can see in the West Coast, which includes California, but really the mountain regions of America is where most of the building is, 116,000 builder homes for sale on the West Coast. That's almost as high as it was in '07.
Mm-hmm.
So we have builders flooding the West, Mountain West, and South with inventory. However, look at this. Midwest and Northeast has almost no builder homes for sale. So the Midwest builder homes for sale are down 60% from previous peak in the mid-2000s. Northeast is down about 40%. So we have almost no builder activity in the Midwest and Northeast, but lots of builder activity in the Mountain West and the South. And that is one of the things that's helping drive the bifurcated housing market we've been talking about. And I just want to actually show you now an example of what all that inventory is leading to. So this is a home building community. I went here in Florida. I actually filmed a video there on my YouTube channel. But we're seeing houses like this pop up. 5-bed, 3-bath, 2,500 square foot. Let's see here how much the builder's charging. 369,000. That's $150 a foot. I don't even know if you can build it for less than $150 a foot on construction costs. That's what the builder's selling it for. But not only that, Adam, not only that. I went into the sales office and I asked about this house. You can see they quoted me the sales price right there, 369,000. Look at the mortgage rate they quoted me.
4.8.
4.8% mortgage rate, 360-month term, which is 30 years. So the builder is selling this house, 5-bed, 3-bath, $150 a foot with a 4.8 mortgage rate for the full 30-year term. They're also giving all types of like incentives on closing and paying reserves and things like that. So, understand everyone, there is a housing downturn playing out. It might not be tremendously obvious to you if you read all the mainstream headlines, but when you look at certain pockets of the market, like the builder sector, when you look at Florida, when you look at Texas, there is something big going on right now, which is good news for you as a prospective buyer or investor. Prices are dropping in these areas, and the builders especially are going to lead the downturn in the South.
That's amazing. So it sort of sounds like if you're an aspiring buyer and you're looking for a good deal and you're mobile, you should definitely look at the South and the American West at new homes because you might be able to get I don't know if I want to call that a screaming deal, but it kind of looks like that on the surface.
That's the payment on that's $2,200 a month. So if you think about that per square foot, like per square foot per month, that payment is like 90 cents a month. I mean, I'm not going to call that cheap, but that's pretty affordable.
Yeah.
Granted, it's not, that wasn't in the best location in the Tampa metro, but still, there's plenty of housing supply now coming available from these builders that's much more affordable than what you're seeing on the resale market.
Right. And it's a brand new house. I mean, you're in theory, if it's built well, you're getting something that's going to hopefully require less maintenance than the average existing home.
That's right.
Wow. Okay. So yeah, I mean, after many years of having these conversations with you, Nick, I feel like you're finally, being able to give some pretty short-term optimism to aspiring buyers here. Now, sellers might be a little bit panicked looking at this. Um, so, I mean, I guess, well, let's talk about inventory on a national basis for a moment, because you talked about it in that last chart. Um, so, we've heard for many years this narrative of uh, home prices are never going to really go down because we have this national housing shortage. I think you and I have talked enough times, we don't have to get into it in detail here, that it may not be that we have a unit shortage. We might just sort of have an ownership imbalance, that, there's a lot of second, third, fourth homes out there that are, owned by mom and pop landlords. Increasingly, the institutions got into the space with the inventory taken up by everybody climbing in for short-term rentals, et cetera. So obviously the inventory situation right now is very bifurcated, to use your language, which obviously is manifesting itself in prices as well, where there's inventory is surging, like Florida and Texas. Prices are weaker. In places like the Northeast or the Midwest, where inventory is much tighter, prices seem to be a lot more resilient. So what is your general outlook on inventory going forward? It seems like you think it's probably for the foreseeable future going to increase in those Western and Southern markets. Is it going to be relatively stable as far as you can tell in the Northeast and the Midwest?
Yeah, so it's a great question. In the South, we are going to continue to see inventory go up in 2025 due to that builder pipeline, as well as many investors are now dumping homes in the South, because they can't really make money on rentals in the same way they used to.
And
So I
so to
feel really
interrupt you
confident.
on this. Sorry to interrupt you, but I got to pat us on the back. For at least 2 years, Nick, you and I have been calling that was going to happen. That these investors who were buying up these homes, they were going to be the weak hands. For them, it's not the roof over their head. It's just an Excel decision. Hey, this isn't cash flowing the way that we thought. Dump it. And it seems like that's actually happening now.
Yes, and actually, I want to show you some data on that, just so we could show your viewers we're not speculating here. This is a chart, a table that comes from a company called Parcel Labs, Parcl Labs. They're a housing data company, and I've been working with them a little bit. And this is a chart showing some of the big institutional homeowners and how many of their homes are currently listed for sale in different markets. And so the CEO of Parcel Labs sent me this data about a month ago, so it's about a month stale. But check out Home Partners of America. They're owned by Blackstone. 9% of their entire portfolio in Houston for sale right now is what this data
Wow.
says. 7% of their entire portfolio for sale in Dallas right now. 6% in Tampa. Look at Amherst Holdings, over 3% of their portfolio for sale, Dallas and Houston. American Homes for Rent, the second biggest publicly traded landlord, 3% of their homes in Dallas currently for sale, 2% in Houston, as well as scattered sales also from First Key Homes, as well as Progress Residential. And this is first sale at a given point in time. So one thing to understand is that these institutional investors are not going to dump all their homes at once, right? If they're going to sell them, they're going to tier them. So the fact that some of them have 3 to 9% of all their portfolio for sale at once is suggesting a major sell-off occurring in some of these markets. And so, yeah, this is another headwind that's going to lead to more inventory and potentially lower prices in 2025 in some of the cities on that list.
Wow. Okay. So the moment is here. We'll see how bad it gets. But obviously, institutional investors, if you're in a market that's had a lot of institutional investors buy in past years, you should probably expect that they're going to be contributing to the selling pressure going forward from here. How about in the other, like in this whole bifurcation topic, like the markets that you think are going to be on the good side of the bifurcation, where prices are likely going to be more resilient, more stable. Is that pretty much the Northeast and the Midwest? And do you expect that resilience to persist as we head into 2025?
Yeah, that's a great question. So let's look at this data on Reventure app, which is the program I have up on here right now. It's a software program I developed to help home buyers and investors access data. We have a metric called inventory surplus or deficit. And this shows how today's inventory compares to the long-term average in a given month. And so the areas in blue, they're the ones with an inventory shortage still. So you can see that inventory shortage is really, like you said, just persistent in the Northeast and Midwest. So in New York, our inventory is down 22% from the long-term norm in New York State. So what that means is the long-term average inventory in New York since 2017 is 48,000. We have 36,000 on the market today. Now, the reason I benchmark it to the long-term average and not pre-pandemic is because sales are also lower from where they were before the pandemic. So it's not even as if we need to get back to here in New York before there's softness. We probably need to get more back to the average given the lower sales volume. But we're still 22% below. Check out Connecticut. Believe that's where you're from, right, Adam?
Yeah, yeah.
Yeah. Connecticut is the most inventory constrained housing market in America. Inventory is down 47% from the long-term norm. Take a look at this. Prior to the pandemic, we had 18,000 homes for sale in Connecticut. The long-term average is 10,000. We only have 4,600 on the market today. So, in a market like this, you could see our home price score, Reventure's home price score for Connecticut's a 64 out of 100. We think prices are going to go up based on this data. If there's this inventory shortage, you're not going to see prices drop, right? There's a legitimate shortage, right? If you hear people talking about a housing shortage, it's here in the Midwest and Northeast, also New Jersey. Inventory is down 36% from the long-term norm. So
And what just generally is responsible for that? Is it there's just challenge to find space to build? I mean, I'm from Connecticut. It's a lot of small little historic villages. There is, I don't know what the zoning's like. I don't remember what the zoning's like, but I mean, there is space to
yeah,
build there. I'm sure in upstate New York, there's plenty of space to build.
there is plenty.
Maine,
There is
certainly
plenty
in
of
the middle
space
of
in them.
Maine. Yeah. So what is it that's keeping inventory so constrained there?
Yeah, it has to do with building. It has to do with building and valuation levels. So this is now the housing unit growth rate in the last 5 years, 2018 to 2023. You could see very little housing unit growth, the amount of available housing units for either. This isn't even available housing units, it's total housing units. The amount of housing units in the state, basically flat in Michigan, flat in North Dakota, up 1% in Maine, up 2% in Pennsylvania, up 2% in Ohio, only up 2% in Connecticut. So yes, there is a massive shortage of building. The builders don't go to these states anymore. And actually, in particular, I know a builder in New Jersey. He actually moved down to Tampa, but he still builds up in New Jersey. You can see New Jersey only added 5% housing units. Compare that to Texas, which expanded its housing supply by 12% in the same period. Utah expanded it by 14%. And what the builder in New Jersey tells me is that they've added so many local rules, ordinances, and regulations in New
Hmm.
Jersey that unless you're a local who knows the planning board, knows the zoning board, and can pull the strings, he said it's very hard to get a project approved. And so I think a lot of these builders just don't even bother with some of these states because it's too much red tape, too big of a headache. And so as a result, they take the supply they would have built in New Jersey or Connecticut and they just build even more of it in Texas and Florida.
Got it. Okay. Interesting. Being here in California, I hear very similar stories about just that it's a nightmare to build here, which obviously, uh, you can see why the builders go to those sunshine states where things seem to be a lot more lax, or states like Texas where there's just tons and tons of land and lax regulations.
Yeah, and actually, if you don't mind, I know you probably have a lot of viewers. You have a lot of viewers out in California, right?
I do. Yeah.
Okay, so let's just take a quick look at California. I think you're in Sonoma County, right?
Good memory. Yep. Right there.
Okay. So in Sonoma County, we actually now are starting to get to a slight inventory surplus. And we'll rifle through some of these counties real quick so your viewers don't get too bored. But during the pandemic, we only had 500 homes for sale in Sonoma in November. Now we have almost 900. So this is positive movement, right? We have a 45 out of 100 for our price score here, which technically its price is stable. If I had to say, this probably corresponds to maybe like flat or a slight decline in prices we're forecasting for Sonoma over the next year. But you can see Northern California is where we're starting to see an improvement in inventory, up in Yuba County at 36%, Sacramento County 5% inventory surplus. Even around Tahoe, Lake Tahoe, we're starting to see more supply. Where the shortage really is in California, though, is like in Orange County, we still have a 12% shortage. In Ventura County, we still have an 8% shortage. Um, and these are off inventory levels that are already pretty low. So, we have another metric. Inventory is percentage of houses. How many homes are for sale divided by the number of owned houses? In Orange County, only 0.5% of owned houses are for sale
Wow.
currently. You look at this map nationally, corresponds pretty closely to what we were just talking about as well,
Yep.
that shortage of homes for sale in the Northeast and Midwest. But let's zoom in on Florida for a second. In Florida, in Polk County, where Lakeland, Florida is, big boomtown, 2% of all the owned homes are for sale. In Osceola County, this is where near Disney, 3.2% of all homes are for sale. So we literally, on a relative basis, in some of these Florida areas, have 5 times more homes for sale compared to California. In Miami-Dade County, almost 3% of all the owned houses are for sale. So the moral of the story is California, things are getting better. There's more supply, but it's still not even close to the levels it's at in Florida,
Yep.
right? And so that's why Florida is leading this downturn along with Texas.
All right. I have raved in many of our past conversations about the value of the Reventure app. I'm so glad to keep pulling it up here. Folks, if you are into real estate, not familiar with the app, you should definitely go check it out. And if you're thinking about buying a home, especially if you're mobile and could, consider different states, highly recommend you get it and do some of the searches that just Nick has just done here. It's such an incredibly valuable tool to target markets where the conditions could be way more in your favor, versus other locations. So super valuable, Nick. And actually, maybe let's talk about that for a second. I mentioned a little while ago that you've recently created a price forecasting model that basically delivers or makes a price forecast for pretty much every real estate market in the U.S. and that eventually rolls up into a national market. What can you tell us about that new service?
Yeah, thank you. We have a home price forecast score on Reventure app for almost every city, county, zip code, state in America. So this score is ranked from 0 to 100. 50 is the middle. So if the score for your area is above 50, that's indicating more of like an appreciating market where there's tighter conditions, more favoring sellers if the score is above 50. If it's below 50, it's indicative more of a buyer's market where it's more favorable to you as a buyer, where prices are more likely to drop, where you're going to have more favorable conditions in 2025. And we view this as a 12-month forecast. And one of the reasons we're really excited is that this score did very well forecasting the housing market over the last year. This score, if you don't actually mind me bringing this up, I'm going to show you. This score
Oh, please do.
forecasted prices in the large metro areas in America with 74% accuracy in the last year. And so you could see here, we have home value growth in 2024 versus what the Reventure app score was in 2023. So what did the score say in 2023 versus what was the growth in 2024? A 0.74 correlation coefficient.
Correlation, yeah.
Basically, the higher the score was last year, the higher the home price growth was this year. The lower the score was last year, the lower the growth was this year. And we did pretty well forecasting the markets that actually did have negative growth. And so this is a score based on the fundamentals in the market. Actually, we compared our score to Zillow, and our score actually did better than Zillow as
I
well.
was
I'm
actually
trying to
going to
find it
ask you
here.
that.
Yeah, we have our forecast against Zillow. It actually did much better than Zillow's price forecast in 2023. And this score is based off just the key fundamentals in the market: inventory trends, days on the market trends, price cut rate, recent appreciation with an adjustment for the trends in mortgage rates. And it's so powerful for you as a buyer or investor or seller to have this window into the current trends in the market and the likely future trends. And again, we're not saying the score is perfect, but it's some of the best data out there in terms of having an idea if prices are going to go up or down in your area after you buy. That's something that any home buyer or investor needs to know, especially if they're going to plop down $100,000, $150,000 for a down payment. You're not going to want to do that until you have a more firm firm understanding, but we rolled this price forecast up to a national level as well, because we wanted to do a national home price forecast for this year. And interestingly, I was actually surprised at the result. We are actually forecasting price growth in 2025 on a national level at Reventure app, 0.9% price growth in 2029. Now, this is due to the fact, as I showed you before, that the inventory and the days on the market, it's improving on a national level, but it still needs to improve more before we see prices drop nationally. So here you could see the last 10 years of home price growth according to Zillow in gray, the Zillow Home Value Index. Median is around 6% since 2015, which actually shows how much the housing market has appreciated, how we're in this kind of big bubble right now. 0.9% is what Reventure app is forecasting. And you could see when I started calling the housing downturn, when prices were still growing at double digits, I was seeing what was coming. But prices haven't dropped yet. Up 2% in 2023, up 2.5% in 2024. But 2025 is really going to be the year where the slowdown starts to spread, and we really start to see declines happen in quite a few different states. And so this 0.9% forecast is an average for the US housing market, but we expect prices to drop here at Reventure app in Texas, Florida. Even a state now like Tennessee is starting to get really oversupplied. A state like Alabama is starting to see a lot of supply, as well as out in Colorado, Utah, Arizona. A lot of these states are seeing a big surge in listings. Same story with the builders building homes, selling them at discounts, as well as investors starting to get out.
Okay. All right. So 2025, so the housing market has been disinflating over the past couple of years, but still positive growth. We're pretty much getting to close to stall speed next year per your model here.
Yep.
Let me ask you this. So do you expect things to kind of trend, sort of sideways from there for a while, or do you expect this to tip into actual deflation where we start seeing national price declines 2026 and beyond? And let's forget about predictions for a minute of recessions or anything like that. That could totally change the game. But are you because when you and I have talked in past years, you have said, hey, the housing market is, overvalued by 30%. And so I think people have expected, okay, that means we're going to have a 30% correction in the market. Do you think we will, on average, given enough time? Or is this like an overvalued stock market where sometimes it can just trade sideways for a decade as earnings catch up to the initially inflated stock prices?
Yeah. I don't totally know, Adam, if I'm going to be honest. So I think I see two potential scenarios here. I see a scenario where we see a 25% decline in prices on a national basis. But to see that play out, we would have to see more supply. We would have to see a recession. We would have to see kind of an impetus for more sellers to reduce the price. There's been two major housing downturns in US history, the 2008 to 2012 crash, as well as the Great Depression. Prices in both scenarios went down 25% in nominal terms. In both scenarios, we had a big spike in the unemployment rate. So you do need to see a big spike in the unemployment rate to see a big decline in prices. So if we're saying no big spike in unemployment rate or only a marginal spike in unemployment rate, it's probably going to trend closer or more in the middle of what you said. Like maybe it doesn't trade sideways. Maybe it's a grind down over multiple years, where in 2026, national home price growth flips to -2%, in 2027, -4%, all the while incomes continue to grow. So that's the other side of the equation. Incomes. Ultimately, household incomes are the number one determinant of home prices in the long run to go along with inflation levels. So if we see inflation, let's just say stay in a range of 3% or stay in a range of 4%, maybe it goes up a bit, that's not going to deliver enough income growth. That's not going to deliver enough inflation to support the housing market. So I think we'll see the housing market grind down. There's also an alternative scenario, which maybe we could discuss later or in another video. What if inflation really rears its head again, goes back to double digits? That would also probably alter my forecast. But I think the baseline forecast is a grind down on the housing market over the next 3 years on a national basis, where prices start to incrementally drop, maybe in the second half of 2025, and then incomes go up, is the baseline national forecast.
Okay. So is it fair, and I don't want to put words in your mouth here, but is it fair to say that you think that the current elevated ratio of home prices to incomes um, is going to trend down over time. And whether the home market, the average home price goes up or down as a result, will totally depend on how incomes grow. But that ratio of price to income, you think will eventually start mean reverting, which all extremes should do.
Yeah. I think it will. I feel very confident saying this situation in the housing market won't last, where the typical home value is trading for 4.3 times median income in 2024. We just really haven't seen any historical precedents for this continuing. This data goes back to 1953. There's been three peaks in terms of home prices surging relative to income: 1954, 2006, 2022. Only three times have we ever seen prices relative to incomes this high. We didn't even see that in the early 80s when we saw the mortgage rates at 18%. Actually, in the early 80s, it wasn't really a bubble because home prices to income were still at a fair range. Even in the inflation of the 70s, home prices to income didn't go up, meaning incomes kept pace with home prices. So what happened? In 2006, the last bubble, we had a big crash. Prices went down, which is why they got more affordable. In 1954, we could see home prices to income also went way down, starting in the late 50s. Why? Not because prices dropped. Prices actually traded sideways for about a decade, but it was because incomes had their biggest surge in US history.
Mhm.
Nominal incomes in the late 50s into the 60s spiked, which made housing more affordable. So this scenario is historical precedent for, what you described, Adam, of the market trading sideways. '06 is historical precedent for the market crashing to return affordability. Maybe we see something in between, right? Because this housing market has flavors of what we saw in the mid 2000s with what the builders are doing, with all the investor speculation. We don't have as many bad mortgages, so the downturn on nominal prices likely won't be as bad. But we still have other similarities with the mid 50s into 60s, where maybe we're going to see better nominal income growth as well.
Okay. All right, Nick. Well, look, we're coming up on the hour here. I definitely want you to give folks direction on where they can go get the Reventure app and whatnot. So we'll get to that quickly. But as we sort of wrap things up here, what concluding bits of advice would you have for both the aspiring home buyer and the, you know, aspiring home seller who doesn't want to wait so long that they perhaps get in the position where they have to be a motivated seller?
Sure. I think the advice for both parties is to arm yourself with data, because the housing market doesn't have to be so confusing, right? If you look at what's going on in your city and zip code in terms of the trends in inventory, price cuts, days on the market, you can gain a lot more clarity and certainty about what you're buying into and where the market is heading in the short term. So arm yourself with data more generally. But if you're a buyer, you're in the South and parts of the Mountain West, you will likely see more favorable buying conditions in 2025, which is great news. More inventory hitting the market, more price reductions is likely what you're to see in those regions. If you're a buyer in the Northeast and Midwest and parts of California, you're not going to be so lucky in 2025, especially the first half. It's still going to be competitive. There'll still probably be some bidding wars. So understand what your market is doing so you can make a more informed decision. Additionally, if you're a seller, I think my number one feedback, especially seeing what a lot of sellers think here in Florida, don't be greedy if you are a seller. Talk to your realtor, try to get the market comps, make an educated decision, but also look at where your market is trending. Because I see a lot of sellers in Florida who are ignorant to what's going on in the market right now. They are overpricing their homes, and their homes are then sitting on the market for 9 months. And they're having to cut the price by even more than if they just listed it at a fair price in the beginning. So if you're a seller, don't be greedy. Talk to your realtor, understand the comps, and look at where the market is heading into the future over the next year so you can price your property at a fairer rate so it will sell.
All right, very wise advice. All right, well, look, one of the best ways I know of to get data on the housing market specifically on particular housing markets, particular cities and zip codes, is the Reventure app. And I think you've given people already a really good sense of what it can do, although I know we just scratched the surface of the different types of data points it can share with us. For folks who think that's really cool and would perhaps like to play around with that app, where should they go?
Sure. Please go to www.reventure.app. So this is a web application right now. We're going to have a mobile app released probably in the next month and a half, but right now it's a web application. And if you go to www.reventure.app, you can see the home price forecast for your area, the overvaluation rates. We also have data on cap rates, population growth, all types of housing affordability metrics tracking the short-term and long-term appreciation. And all this data goes down to the zip code level. So you could see how your neighborhood is trending in terms of home prices compared to other regions. You could see near where I am in Florida, you see a lot of downward price movements, but then there's other areas where prices are still going up, even in the same metro. So important that you arm yourself with the data, www.reventure.app. We have a free plan for some basic statistics and then a premium plan so you can get these home price forecasts down to the zip code level.
All right, fantastic. And just so folks know, how much is the premium?
The premium plan is $39 a month, or if you want to do the annual plan, it's $399 a year, which saves you 15% on the monthly cost.
Okay, yeah. So folks, I mean, look, if you're looking to buy or sell a home and you want to do your market research, that monthly rate is it's not even a rounding error, in the transaction value that you're considering here. So seems like incredibly a great value for very valuable data, Nick. All right. Well, look, Nick, just stand here for 1 second because I got to do a quick little bit of house cleaning,
Sure.
but I want to let you have the last word here. Folks, if you've really enjoyed this conversation with Nick, would like him to come back on at some point in Q1 to give us his latest update and what he sees going on in the housing market, then please let him know by hitting the like button, then clicking the subscribe button below, as well as that little bell icon right next to it. As a reminder, buying or selling a house is one of the biggest financial decisions most people make in their lifetimes. If you'd like some help in thinking through the particulars of that decision, highly recommend you work with a good financial advisor, professional financial advisor who can help you do that. If you'd like to talk to one of the financial advisors endorsed by Thoughtful Money, these are the firms you see with me on this channel week in and week out, consider scheduling a free consultation with them by filling out the short form at thoughtfulmoney.com. Only takes you a couple seconds to fill out the form. These consultations, as I mentioned, are totally free. There's no commitment to work with these advisors. It's just a free public service they offer to help as many people as possible. While you're there at thoughtfulmoney.com, again, don't forget to hit that newsletter link at the top of the website to sign up for our newsletter and upgrade today to the premium version if you want to, if you've been meaning to upgrade to premium, because I want you to get grandfathered in at the current price before it goes up tomorrow. All right, Nick, thanks for waiting there. Most people who are watching this channel are just regular people. They're regular homeowners or aspiring homeowners. Any parting bits of advice beyond Happy New Year? And Happy New Year to you, because we're filming this. This video is coming out on the last day of 2024. But any parting bits of words or advice you'd like to offer these folks?
Sure. Yeah, Happy New Year, happy 2025. I think 2025 is going to be the year where you finally start to see substantive changes in relief in the housing market. If you've been someone who's locked in on your mortgage or a home buyer waiting, in quite a few areas of America, we are going to see a lot of positive improvement in 2025. So for those of you that have been waiting a long time, this could be your year. And so I'm excited to see that. I've been bearish on the housing market for good 3.5 years. Here on YouTube and coming on your channel. It's actually exciting now to be able to be a bit more optimistic for prospective buyers and actually tell them that prices are getting cheaper in some areas and that there is more inventory and that you can get some pretty good deals. So that feels really good actually entering 2025, and I think I'll be able to say more of that as the year goes on. So I'm excited to do that.
Oh, that's fantastic to hear. So first off, Nick, as I mentioned, any time that you're seeing things develop in a way where you think you've got a material update for folks, I've got an open invitation to come back on this channel anytime to let this audience know about it. But I'm right there with you. I can't wait to start being more bullish about the housing market. And I hope at some point in 2025, we may be able to say the same thing about our general financial markets as well, which are experiencing similar levels of high valuation. And it does get tiring to have to be, advising caution for as long as we have. But if we can get to the point where we can start saying, hey, folks, there's a lot of good potential value emerging here, that's a much more fun space to be in.
100%.
All right. Well, look, Nick, thanks so much. Great discussion. Thanks again for sharing all the charts. You always leave it on the field data-wise. And I wish you and all the Reventure Consulting viewers from your channel, very happy new year. And like I said, look forward to having you back on the channel anytime you like to come.
Looking forward to it, Adam. Happy New Year.
Thanks, Nick. Everybody else, thanks so much for watching and happy new year.